I would say Sedgwick is one of the oldest and most experienced brokers in the market, having been incorporated in 1984 as Sedgwick James Insurance Brokers, a subsidiary of Sedgwick UK. So we were actually a subsidiary of Sedgwick UK all the way up to 1998 when Sedgwick was bought off by Marsh Incorporation. The name Sedgwick was retained when Sedgwick was sold. So Sedgwick now is, I would say, it have local shareholders, but still playing a very big role in the market. Yes. Across the board, Sedgwick writes, it's an all-round broking firm, offering the traditional general broking services, covering the assets of the company, covering all the major lines of business. And also, I must say that we are also registered as medical insurance providers by Insurance Regulatory Authority. We are also registered by RBA, Retirement Benefits Authority, as pension administrators. So in a nutshell, I can say Sedgwick is a full-fledged broking firm, able to offer all the broad spectrum of services and covers that corporate and individual clients may demand to have, yes. What I would like to say is that the client have become very, very dynamic. The client cannot be served by the old models. Demographics are changing. So the challenges for the insurance industry is to make sure that the products that they offer, the mode of delivery is in sync with changing needs of the client who is getting sophisticated every day. So for us, it's just to innovate and think and respond. The industry may not be responding 100%, but we have seen underwriters, brokers who are working very hard to keep up with the customer demands. We may have a bit of way to catch up, but the brokers and the underwriters who will survive are the ones who are responding to changing clients' requirements.
How important is technology in all this?
Extremely important. As we know that technology is a major disruptor and a lot of change, I must say, especially in terms of distribution. Gone are the days where, a lot of things had to be done face-to-face, on paper. So part of the sophistication that we have seen is where we are looking at a younger generation, people who want to get services when they want it. So it must be provided through technology, through mobile phones, through information, through emails. We've seen a lot of paperwork being cut. We have seen a lot of online communication with the clients. So I would say technology, you ignore it at your own peril. As a broker, the challenge that we encounter today is basically sometimes some issues are still historical, where we are still dealing with demystifying of insurance and the insurance needs of the client. And of course, I would say there is quite a knowledge that is required. Knowledge in terms of the roles of the various parties in the insurance chain. People to differentiate the role of the broker. Who is the broker? What value addition does he deliver? The question sometimes we are often asked is, where do you come in? So we have to to justify our space in the value chain, and that is the essence of the broker. But for those clients who understand and those who know, the broker role is absolutely very critical. And those who come in they never regret that they are being serviced by a good broker. I would say the weakest link is the communication between what the customer wants and what the industry as a whole is providing, and whether the various players in the value chain are actually responding to the needs of the client. Like I've said, there are many instances where the insurance products are traditional. They have not changed to keep up with the needs of the customer, the requirements of the customer in terms of, is this what I really need, and the price and how is it going to be delivered. So for me, what we have to keep on working on, all the parties, is that relationship with the client so that we don't lose it. So the challenge for everyone is, and we all serving, whether we are agents, whether we are brokers, or we are underwriters, we are serving one person. And that one person is the customer. So the customer in this case, the weak link would be if all the stakeholders are not serving the customer. And that, for me, would be the weakest link. Yes, you are right in saying probably the biggest focus will be on the underwriters, who actually are the contract holders. Remember, the insurance contract is between the insured and the insurer. That's why there's a tendency to be seen that the regulation is really targeting on the provider, who is the insurer. But we cannot understate the importance of regulation to the other players, because they come in between, they negotiate the contracts. If they are agents, they are entering into those contracts on behalf of the underwriters, because they are the agents of the insurance companies. Brokers also have to take responsibility for their actions. If they give wrong advice, then it affects the value chain adversely. So the regulation should place responsibility on each of all these players. I must also emphasize on the need for internal self-regulation, the code of ethics, let's say, among the brokers. I think it's also very important that every player, if they are underwriters, they have a way of self-regulations, rules. Yeah? Same case with the brokers. Yes, there is a minimum requirement. For once, if you are starting up, you have to put in a guarantee of about 3 million. It's about 3 million, which you need to place. There are rules that have been placed in terms of other requirements. If it's the professional indemnity, you must have a minimum professional indemnity cover. The standard that we have seen in the market is about 50 million professional indemnity cover. But in terms of capitalization, you'll see the capitalization is not as stringent as that of the underwriters. And also that explains the reason why there are many brokers in the market, because I would not say the capital requirement is very stringent. So it is within means of many.
Do you think it should go higher?
I would say the standard should be higher. The capacity of the brokers should be higher. Probably it should be higher. Many people will agree with me, because the argument have always, why don't we license as many brokers as many agents? We don't have a problem with that as much as they meet a certain threshold in terms of the people they can employ, in terms of capitalization, in terms of their capacity to deliver services to the client. I must agree is a big challenge. Number one, we must realize and appreciate that there is law, that insurance should be on cash and carry basis, strictly speaking. though that is not easy to enforce. But in terms of, I would call it what is necessary is measures that could be taken, probably to blacklist brokers who do not remit the premiums directly to the insurance company. It is also the responsibility of the insurance company to make sure that this is done. If premium remains uncollected within a specific a period of time, cancel the policy. That will force probably brokers who are holding client monies to actually remit that premium to the underwriters. Again, because of what we have said, capital-based supervision also requires that underwriters, they don't carry a lot of liabilities in terms of uncollected premium. That means they are writing business, they have not collected the premium. So I can say we have also seen a lot of push because of the law by the underwriter to collect premium as quickly as possible.
So it has improved.
It has improved. It needs to continue improving. We must also say that in our environment, the credit policy is something that is always negotiated by clients. And that's why there are other facilities like insurance premium financing, so that if somebody is not able to pay upfront, we can always arrange insurance premium financing. So I would say nobody, the client is obliged to pay premium and pay them in time. The broker have a responsibility to ensure that that is done and the premiums are actually forwarded to the underwriter. I must say they are good prospects. The foreign investor who are coming in, they must be seeing something which we are probably not seeing. But the influx of foreigners into the market is a pointer that there's a lot of potential in Kenya and in Africa. Remember, Africa is said to be the rising, continent in terms of potential, in terms of demographics. So I would say they are investing more into the future, looking at the demographics, looking at the economic trends. Where are the markets? Markets probably are saturated out there, but they see a lot of potential in the African and in the Kenyan markets. Yes.